G'day guys, welcome back. Money in the Tank, episode 49, one away from the half century. Who would have ever thought we would have got to a half century coming up next week? So keep an eye out for the special podcast edition, half century cricket edition next week. We're looking forward to taking you on the update as we go in terms of episode 50, but 49 today. We've got some awesome stuff for you guys. So we're going to cover off on a bunch of information relating to the market and what's been going on with the volatility of late. I'll cover off a bit of estate planning information, which is pretty helpful when it comes to planning your future, and it can be done at all different ages. And then Arnie's going to take us on a quick rapid fire edition of the news segment. So without further ado, my name's Joel Seach, Principal Advisor, Harpel FG. We've got Arnold.
Yeah, Arnie, finance professional. Thanks, Jolie.
And Brad,
journalist and startup guy. And I just thought we might do something, because we're all going to endeavour not to interrupt each other on this cast today. And so I think there's $1. I think there might be a $2 if we interrupt. $2 in the jar, and maybe over the next few episodes we'll do a little donation somewhere, depending on the. So if you pick us up, leave a comment and catch us out.
Absolutely, the swear jar, the interruption jar. So we're loving it, but we're all pumped. We all love doing the podcast, so we just get excited and looking forward to catching up and chatting with you guys today on all things finance on Money in the Tank. So thanks for tuning in, tankers. Arnie, where can they get us at if they want to ask any questions or touch base with us?
Yeah, get us at Money in the Tank on YouTube, Instagram, Facebook, and Twitter. And we love, leave a like, comment, or give us a subscription on the YouTube, because that helps the algorithm, and we appreciate engaging with you all. So, and give us, if you want, Q&A, or you could drop a 50-50 topic, which is our favorite part.
Yeah, absolutely. So without further ado, let's get into Rivkins today. So we've got the Bible here, random page 81. Rivkin, Renee on success. Do not compromise your integrity. So I like that one. It's a very serious one from Riv. And take breaks from working when you need them. Too many people work too hard. It takes the fun out of it and reduces your performance.
There's Rivkin on a boat with a nice cigar and he's up there.
The work-life balance.
Take breaks, yes, agree, and don't compromise your integrity. I think, good advice, as always, from the Riv.
And strip it back one step further. Try to, if you can, in your working career, do things that you enjoy doing. Enjoy the tasks and the work at hand, so it doesn't necessarily feel like work. You live happy, in your work life, and you live happy in your personal life too. But that balance is always spot on, I reckon. And the integrity.
No. I was discussing that with the better half last night. Actually, I've had a crazy few weeks, and I said, but the difference is, compared to kind of in the past, even when you wake up and you've kind of had a few crazy days in a row, like 2 a.m. mornings and the rest of it, you're still doing things you love. And so it's kind of like, oh no, today catching up with Andy and Ross talking about like some companies we want to invest in. Oh no, I've got to meet some VCs. Oh no, I'm going to meet for lunch to do this. Like, yes. Oh no, I'm going to do a podcast. It's it's stuff that is really, really enjoyable. So even when you have cracking days, there's still all things I want to do. And so getting to this position, it's a good point, Charlie.
Before we get into your market update, Brad, I think you might have to just wind back the clock on that when you're editing, because I think you just did the first interruption of Jolie. That's $2. We might need a counter. Might need
until Joel finished.
No, you didn't, mate. That was a cut-off.
Oh no, that's $2 right there. $2 in the jar. I want to talk about, I guess, we've touched on a couple of topics recently, like about, say, the UK bond market and the rest of it. So I just want to touch on market volatility at the moment and a few things around it. So first of all, I think, anyone that's watching the markets day to day at the moment, like myself and like, I'm guessing everyone else here on the panel, it can get unhealthy, and due to the volatility that's occurring at the moment, because indices are moving altogether. Companies, there's no real unique companies, largely kind of outpacing different industries. It seems like whole industries or the whole indexes are moving at once. The US, I think, was a perfect example of some volatility on on their trading where they were down about 1.7% and ended up 2.2% up. It was kind of like a 4%, and there was actually no kind of no necessarily reason or good data that came out that was driving that.
Was that last Friday, Brad?
Yeah, last Friday. Yeah,
they had. I listened to a podcast. I think a market update on Monday morning, and it was one of the biggest swings they've ever had. I think it was a 1,500 point swing, and they reckon maybe it was some hedges and some put positions on that were sort of sells and whatnot and buys, but I'm not sure. So yeah, crazy swings.
Yeah, last Friday, and that's the thing. Like, so whenever these swings occur, everyone always tries to go out there and go, okay, well, what caused the swing, right? And try and work out who were the market movers. And I guess the hypothesis at the moment is, and it's an interesting one because you always get people like the 50-50 on both sides. Hypothesis at the moment is that the market thinks that kind of the bottom has been priced in at the moment based on all the possible bad news and the rest of it at the moment. And that's what it was kind of like a bounce off the bottom. Even though obviously, the IMF is kind of saying, 60% or 70% of the world should be in recession next year, and there's a lot of kind of, doom and gloom. The market's kind of this volatility is caused by, I guess, people kind of betting we are at the bottom and people betting that we're not at the bottom, and it's causing just this wild swing. So I thought, first of all, I'll go first and I'll throw it around the pod, but just kind of, I know we've touched on this a few times, but kind of maybe 2 to 3 things individually that you do during these volatile times to ensure that probably you don't get caught up in the emotion. So one is, I guess, don't get caught up in the emotion of the volatility. And I guess the ways you can do that is, one is, if you've got a long-term view, actually switching off is not necessarily a bad thing. So not watching it day to day, because when you watch something day to day, you probably know that from reading bad news about any topic, right? When you're constantly feeding yourself, volatility or bad news or whatever, it can actually distort reality. We end up in a bit of an echo chamber. And we know the media loves a bit of blood in the markets, so they won't ever run away from kind of throwing an article out there just to make kick you while you're down. So one is, for me, is actually like staying away. That's more of a mind over matter kind of thing. Or if I'm not looking at it, I'm taking a long-term view. One is obviously take that long-term view, and so by continuing to invest during these periods in either categories or individual stocks that you believe you've done, obviously your due diligence and analysis against it, you believe have got long-term upsides on your investment thesis. Continue to invest during the good times and the bad times. So you might miss that huge rally, and you might still lose some money over the short, medium term. So you kind of miss out on the massive tops and bottoms and trying to kind of read each one. But as kind of data that Joel kind of shared plenty of times, kind of over the long term, just that kind of steady investment, continuing to dollar cost average is another thing. And lastly, don't try and pick the tops and bottoms, because I've been, there's times that you can kind of go, I believe that for the short term, I don't want to play in these areas. That's fine. But try and actually pick, like, sell out here, rebuy back in here, sell out here, and rebuy back here. No one really in the world is good enough to do that stuff. So I think you're only, you're only kidding yourself. I've kidded myself plenty of times, just FYI, thinking that you can do it. But just thought I'll do those things. I'll throw around first to Arnie. What are your thoughts on that, mate?
Yeah, I got a few thoughts on that. The way I approach investing is I look to a bunch of different factors, and I typically invest for the long term. And when I've got a stock that I want to hold for the long term, I try and do what you mentioned, which is to tune out of any short-term news cycle. Well, actually, I do try and pay attention, but if I sort of internally categorize it, like, is this short-term news that is going to positively or negatively affect the stock? If it is, I put it in the I don't care basket. As referenced last week with Tesla and Elon and Twitter, which we'll talk a bit more about later. or is the news significant? Is it going to have a medium to long-term effect? And should I change my thoughts on a stock? So I do try and keep a few fingers, or a couple of fingers on the pulse of the stocks that I follow. However, I also have a few stocks in my portfolio that are, I guess, ones that I'm not as attached to long term. And what I tend to do with those kind of stocks is, like, as you mentioned, like if I bought in recently and it's I've lost a bit of money on it, I might try and wait for a big green day in the market and then sell covered calls above my cost basis. So that way I'm going to earn that premium from the selling the covered call. But then if the stock gets called away, I make a good percentage anyway, up and above my my initial entry. And then if it does get called away and I like the stock, I'll sell cash secured puts against it again, it's basically the wheel strategy, which is what I'm describing. There are certain stocks in my portfolio where I'm not super attached to it for the long term, and I just want to generate some income, aside from dividends. So premium is a good way to do that. And then if you do that, in a way, it just gives you more money to fuel those buys of the longs that you want when they reach an attractive price. So yeah, I've made a few purchases lately. So not investment advice, and do your own due diligence. But I recently bought some more Intel. I already owned it, and I bought some more because I feel like it could go lower. But at its current price, I feel like it's an attractive value proposition. Some people are calling it a value trap. I think it is a value proposition. So I'll throw it to Joel if he's got any thoughts on that. Or back to Brad quickly, and then I'll throw it to Joel.
Arnie, is that a long, or is that kind of one that you're playing, that kind of trying to get the value prop?
So the one that I'm selling covered calls on.
No, Intel.
Intel is definitely a long for me. I treat Intel as a long. I'm going to hold Intel for the next 10 years minimum, because I think that, like, in a nutshell, I can't give you my whole thesis, but I do think that with the bifurcation of economies that we've seen with the war in Ukraine, the tensions that you see between China and Taiwan, how important TSMC is to global chip manufacturing and fabrication, I believe that the West will want more security around that process. And I think Intel is the best positioned chip maker to move into that fabrication space and take market share of someone like TSMC. So I'm not talking about them competing with someone like an AMD or an NVIDIA. I'm talking about them becoming the fabricator for those businesses. That's where I think it's going to head.
Well, we might do a quick pod episode on silicon, I think, because I mean I'm huge into the space and just was interested in your thoughts, because there's heaps of thoughts around. Obviously they're one of the only other chip makers that actually are foundry of Western countries. They do design and foundry, whereas kind of TSMC and that are just foundries.
Yeah.
Interesting. Obviously, America's kind of recent moves against China. Initially back on the AI stuff, but more recently on all any American designed, manufactured, or anything to do with chips, right? On the Chinese ban that's coming through at the moment, and how that kind of affects, I guess, obviously the profit line and revenue lines of something like Intel, NVIDIA, AMD. Now they can't sell into the Chinese market. But like you said, with the bifurcation of the global economy, I think there is, and obviously the risks associated with TSMC, there's a reason why, even before the US subsidies, whether it was 80 or 120 billion dollars or whatever it was in subsidies, you already had TSMC, you already had Samsung, and these people kind of dumping 20, 40 billion dollar foundries in the US. And it's going to be an interesting time. But yeah, just wanted to kind of ask if that was a long, because if it is and you're interested in that space, I think good pod. Sorry, Jolly, I will throw it to you, mate, on Arnie's both on Arnie's thoughts, but also on market stuff for you. Being a financial planner, I'm guessing you will have some thoughts, my man.
Yeah, I guess we could probably go more broadly in terms of thought patterns when we're talking with clients in terms of how to remain confident and remain bigger picture. If that's, generally the space we're aiming at, a medium to longer term, bigger picture, consistent methodology in terms of methodical approach, I should say, in terms of planning and what they're trying to do and what they're trying to aim to do. So the swings and roundabouts of the day-to-day markets, we try not to really focus too heavily on that. So I guess taking another view and adding on to Arnie's and your points, some of the things we speak about with that medium to long-term view is continue to make the same habitual decisions around investing and keep consistent and keep unemotional as best you can, and use us as a sounding board to remain unemotional. That's what they pay us to be, and make unemotional decisions about their situation so they don't have to get caught up in the worry of money and the worry of markets. So, a couple of interesting analogies that we sometimes talk with clients about the markets is to think of a big mountain, an undulating mountain that's ascending over time. Your days and your weeks is that mountain going up and down, or I should say your weeks and your months. And the days, you think of a boy or a girl with a yo-yo going up that hill, and the yo-yo is the daily market movements. But every single day it's up and down. And then over time, that mountain, over 5, 10, 15, 20 years, it generally ascends. It doesn't go in a straight linear line, but it'll go up and down over time. So think of the daily market movements as that yo-yo that's going up every day, the kid walking up the hill, and eventually that sort of helps put you in a good position over time. So that's probably an overview, I guess, in terms of just general chat about we have with our clients, what we talk about when we're chatting about the markets, and especially the volatility, that we don't care about the day-to-day so much. And we're working. I met with some clients yesterday. We're going to invest and set up some gearing and set up some investment strategies for them for the medium and longer term. And I said, I don't know what this is going to do a month, 2 months, 1 year, a year and a half, 2 years. It could go up, it could go down. Fantastic. Don't really care that much. But I know over 3, 5, 10, 15 years, the strategy we're going to set is going to put them well ahead of where they were going to be if they didn't implement a change in a situational update for them. So that's just the beauty of long-term compound. And if you've got the time on your side, it's a really added bonus for that as well. And then, when you sort of said before, Brad, with the markets all moving in the same fashion at the moment, another analogy is the US sneezes, everyone else catches colds. It's another saying that sometimes you hear in the markets as well. So everywhere's catching colds at the moment. And we might even do a snippet next week on what a recession is, and talk about that. And there's a definition to it of the negative consecutive quarters of GDP growth, negative growth in 2 consecutive quarters. But what's sort of the definitions, or the things that fall into a recession? What's sort of some of the factors that will come out of a recession, and what does that mean for your everyday person? So we can touch on that as well, maybe in a future episode, which I think could be an interesting one, given that there's probably going to be a few countries that fall into it over the coming 12 months. Yeah,
and I think we can also talk about I guess a depression as well, right? Which is not to get too depressive, the episode, but it's not actually that, like, the actual technical definition is not that far off a recession. So when sometimes people hear a depression maybe in the newspapers, obviously again I go back to the media and loving a kick while you're down. The technical definition of a depression versus a recession isn't that far away from each other, and so we can at least kind of talk about the definitions, and people can be wise up to the media out there. But I think it's a good thing, Joel, as well, talking about kind of what to look out for in recession, because there's actually some good stuff to look out for in recession. It's not all bad news, especially, like, say, in the startup space. Starting a business or starting a startup during a recession, everyone thinks that's a stupid idea. It's actually the best time, because it actually forces you to be capital efficient. There's not that much capital around. You end up focusing a lot more on kind of product market fit and kind of like on the quality of the product, rather than just kind of throwing money at a fire and hoping kind of it sells. And so, we can all talk about it from kind of our perspectives. I think it's a great idea.
Less room for error and wastage, I guess, in a recession. You've got to make smart choices because you've got less of a cushion.
Way less. Anything else from you, Arms, before we move on to estate planning?
No, that's it for me, mate. Yeah, no, all good.
Awesome. Great roundup, fellas. So thanks for the market update, Brad. And I think there's some great points in there for hopefully the listeners found useful in terms of their own situation. It's always general in nature, and try to provide a bit of knowledge for everyone to kind of understand, and always seek personal advice when it comes to your own situation when it's investing. But hopefully those methodologies of how to try to react and keep calm during craziness is a good thing for everyone.
$2 for Arnie. Yeah, so just ahead of Joel's estate planning segment, I'm just going to jump in here and say that I officially recuse myself. So I'll jump back in after Joel's finished here, and I won't touch on any thoughts about this.
Cool.
I
No
was
worries.
going to recluse you. Anyway, Arnie, I was going to, as I kind of throw over to Joel on the estate planning, I was going to be like, Arnie, first of all, I believe you've got an announcement to make on this subject. That's what I was going to do. So, but you're in there, mate. $2, it's fine. Don't worry about it, Jolie. Estate planning, let's go.
No worries. I think whoever has the most at the end should have to. We all get an option to what we choose. Whoever wins the interruption battle by the end, and I choose to have an hour session in Brad's massage chair at his place. So that's mine. If I win this comp, that's what I'm in.
You did thoroughly enjoy that massage chair and that poker night. Everyone was like, "Where's Joel? Where's Joel?" And I walk into the room and Joel just.
For the listeners out there, we had a poker night at Brad's, and it was the first time I've ever been happy to go out of a poker night because I sat in that massage chair in Brad's office there for about half an hour to 45 minutes. I don't think anyone knew where I was, but it was just the best.
I think it was closer to 45 an hour because it was a while there, Joel. You're gone.
Best time I've ever had. Best time I've ever had going out of poker. But anyway, so back onto the wills and estate plans. So a good thing, I guess, came across my desk, and we deal with clients all the time when it comes to estate planning stuff, and we engage with some really good solicitors around this and help make sure that these things are in place because they're super important. And I guess it was probably just we've never really touched on it that much before in the podcast to talk about why an estate plan and why a will and why it's important. So there's different kind of situations in life that come up where you're prompted to write a will. For our listeners out there, let's say our younger listeners, it might be the birth of a child or a new family member coming into play. I know we've done that in our own situation. For maybe older listeners, it might be someone, if you've had someone close or a beneficiary or someone you're in a relationship with that's passed away. Again, it's a change in circumstance. You've taken on a new property or whatnot. So anytime there's a significant change in the circumstance, it's a really good idea to kind of check it and see if there's anything that needs changing or updating. A good solicitor also be able to say if there's just a slight amendment or an adjustment that needs to be made. They can do what's called a codicil, which is where they just amend the will itself and don't have to rewrite the whole thing. So sometimes that can be off-putting for people who have to go through the whole process of writing a new will. It's not always the case. But always seek good legal advice when you're going down that track. But, so people are prompted to write a will after a birth of a child, for example. So it's important to consider what will happen if you aren't around to look after them, because that's another thing. It's not necessarily financial. It's okay, well, who's going to look after our kids if something happens as well? So, making arrangements is really important in relation to that. As an advisor, we sort of help because we know a whole bunch about our client's situation, what they need, and we work with them on a trust basis. But estate planning essentially can involve bringing in a solicitor or a team approach to helping make sure that they're on the right page with everything. So what does it mean in terms of an estate? Well, an estate will handle your owned assets, so things that fall inside of the estate. So essentially, they can be property, real property, personal chattels, which I think I'm saying that correctly, or chattels. It's a funny word. It's a very old school word, and I was actually Googling it before, and it came from, I think it was in the 1940s or 50s, where it refers to personal belongings that are movable, that aren't business property. And they even said it's like horse and carriage or horse and cart. So that's how sort of far back wills can date when they come to that word, which is a really interesting one. Shares, cash or investments loaned by a will maker to a trustee of a trust, income or capital allocated from a trust, and then interest in assets held as tenants in common. So tenants in common is a bit different to the joint tenants. So joint tenants, which I'll get onto this next one, is a separate thing. So controlled assets, so non-estate assets. So there's things that fall outside of the estate, which potentially, planning comes into play as to how that would work for someone's situation. So jointly held assets, so such as joint tenants, which might be very, very common for real estate or investments where it's, husband and wife or partners, and you own something together as joint tenants. That just reverts to that person, the beneficiary, or essentially that person that you own jointly with upon death of the other person. Unallocated assets owned by a family trust. Superannuation is a big one that falls outside of the estate. Life insurance proceeds can as well because they've got a beneficiary nominated to them. Superannuation and account-based pensions, as I mentioned, they can fall outside of the estate as well and can have reversionaries attached to them. So there's a bunch of, planning around that and tax implications of those things too. So general in nature, make sure you're seeking advice when it comes to that. And it's important to distinguish between the two because additional planning is required when you're looking at those sorts of things. So in terms of, I guess, some of the reasons why you prepare a will and the objective that the person might be seeking, it can differ from person to person, but essentially some of the areas that it could be is providing for surviving dependents, such as a spouse or a child, maximisation of taxation, minimisation of taxation liabilities and helping mitigate any undue tax or unnecessary tax, protection of the estate for beneficiaries with special needs. So it could be disabilities or a special disability trust, protection of pension entitlements for beneficiaries in general. And also it can be for people that want to protect their own kids from themselves that aren't very good with money, that need an estate plan set up with potentially a capital protected trust to ensure that beneficiary isn't going to go and blow all the money and go to Crown Casino and waste it all. So really important in terms of succession planning. Succession of non-estate assets, and then any philanthropic objectives as well. So we have clients that don't have family, or they aren't going to leave it to a beneficiary. They're going to leave it all to charity or philanthropic objectives. So noting down what's important to them and why is a really important one as well. So yeah, specific needs. So ensure that the broader issues are taken into account when you're looking at doing it. So there's a range of different things to make note of. So we've spoken about that before, and everyone's situation is unique. A good solicitor, I guess, essentially, in summary, should in the preparation of will should make sure that you're discussing these things, and things to consider before it is who'd be the guardian of your children if something were to happen, your assets and where you want those distributed to. Are there any cherished items or things that are really important? Who are you going to appoint as an executor? You're going to appoint someone that might be a close friend or a family member or multiple executors. It might even be the solicitor themselves that you appoint as an executor if you don't want to leave that executor role to someone that you know, and there's solicitors that specialise in being that executor. If you are going to choose a family member, it's generally the same generational family member. So you don't necessarily want to go to the next age up, because then if something happens to those people, they're an older person, there's a higher chance that you have to then go and adjust that again. So they usually like to have it from the same generation if you can. Who the beneficiaries might be, charitable giving, funeral instructions, which I know I sort of struggle with mortality, and some people do in terms of thinking about that side of things with funeral instructions, any complex circumstances, and power of attorney is another one too. So power of attorney enduring financial is more so when you're here, but you don't have the capacity to be able to act on your own behalf anymore. So you need someone that you can trust to help make decisions for yourself, both financially and medically. So that's a power of attorney. So that's a bit of a different one to an executor. Executors of the estate is if something happens and you pass away, then they manage those affairs and tidy up the estate for you. Powers of attorney is if you're still here, you just don't have the capacity to do anything for yourself. And power of attorney is one of those ones for older people, and our older listeners out there is to be mindful of that. If capacity starts to go and you start to lose, potential cognitive function or ability to make decisions, it's really hard to get a power of attorney in place once that mental ability goes, because the solicitor can't legally think that you're sound of mind to make that decision to put a power of attorney in. So then you have to go through the court system, which can be a really challenging time. So just something to be mindful of in that. And then don't forget to regularly update it and check it. So some of the tips here is marriage, separation, divorce, birth of children, death of a proposed beneficiary, a change in beneficiary circumstances, or a change of who you want to be a beneficiary, and then potential disputes as well between beneficiaries as well. So really important tips there to keep in mind when it comes to estate planning and wills. So hopefully that covers off on a few of those areas, but we might throw around the circle now and see if any of the lads have anything to add to that. So
Arnie's recluse, so we're going to throw him to the side there, but I'll jump in there, Jolly. It's actually something that's pertinent to where I am at the moment, which is I've been meaning through this year and I haven't yet. Jumped on to estate planning and also will and the rest of it. Just as a really, I'm just going to ask a question. No, no advice, no financial stuff, all that kind of stuff.
We don't do that here anyway.
We don't do that here anyway. But where is the best place to start? Is it with your financial kind of advisor, or is it with kind of a solicitor? Where do you kind of recommend starting on the journey?
I think if you sort of know your situation and what you need, then you might just go straight to a solicitor. But generally, if you're seeing an advisor and it's someone that you're engaging in and working with through your personal life and financial life with another loved one, then you're covering a whole range of different topics, and an estate side of planning would come into play when it comes to part of that planning process anyway. So,
Okay.
so yeah, for the listeners out there, it might just be a simple cut and dry. We just need to get a will done. Our situation is not too complex. We'll just go see a solicitor. For clients that have a bunch of different things on the go and a bunch of complexities and a bunch of planning needs and a bunch of objectives they're trying to achieve, then it might be something that will form part of an overall financial plan, which would cover the non-estate assets and also the estate assets as well. And then as part of that process, we'd be bringing in a solicitor to as part of that that process and part of that team.
Really depends on your, I guess, what you're trying to get out of the process. So is it a part of a broader financial plan?
Yep.
Or if not, if you've just got, obviously I've got trusts and businesses and a whole bunch of other things. But if I kind of am aware of the taxational stuff related to them and kind of where I want that stuff to go, I could probably just go and speak to a solicitor. And generally my financial planner or my accountant will be involved in that process anyway. Just what I mean, that's an interesting one. And everyone sometimes is probably like me, which is like, where do I start? So I thought I'd just ask that maybe. Yeah,
and a good solicitor would probably be able to point you in the right direction to say, hey, you need to seek advice from this area in relation to this portion of your situation. So, but yeah, good general in nature one. And Arnie, anything general to add in that area at all, mate? From a will or estate plan?
Oh, that's $2 from me. I'll unrecuse myself. Brad called me a recluse there instead of recuse, and I was like,
did I call you a recluse?
You said you are a recluse, mate. You are a recluse.
Yeah. No, I've got nothing general to add. So I will.
thought it was recused. Sorry, mate. I called you recluse. That's good.
I'm officially back in the convo, and if you guys have got nothing else to add about that, I will just touch on Tesla earnings.
Rapid fire and drinking game.
Tesla earnings first, and then I'll go to rapid fire.
Sounds good.
Yeah. All right, here we go. So I'll share my screen. Just give me one moment, and we'll see if we can get this going. Beautiful. So this is, I haven't listened to the call for Tesla, but I just wanted to quickly share some of the highlights they've got here. So operating cash flow, free cash flow, I should say, is 3.3 billion in Q3, and that's a 2.2 billion increase in their cash and marketable securities to 21.1 billion. The profitability was 3.7 GAAP operating income, 17.2% operating margin, 3.3 billion GAAP net income, 3.7 billion non-GAAP net income, excluding their stock-based compensation in Q3, and 27.9% GAAP automotive gross margin in Q3. And then the often forgotten part of Tesla's business, they had record energy storage deployments in Q3, and initiated transition to a smoother delivery and production mix. So the financial summary here, you can sort of see some of the numbers, and I will say that on their earnings in after hours, the stock dropped about 6.5%, so a significant drop, and that was basically because of if I go down to this next slide, this line here where they were expecting total deliveries, and they've been guiding at 50%, but it was actually 42%. But the total production was above 50, and if you go back up to the financial summary over here, you can see some very impressive numbers. So automotive revenues from Q3 2021 to Q3 2022 up 55%, and that's the margin they talked about here, the GAAP gross margin. The impressive thing about Tesla is if you look at their automotive revenues across the quarters and how much it's been growing, but then look at their operating expenses staying relatively flat or decreasing, that is, I think, Brad, you were talking about capital efficiency earlier, and that's just a highlight there of how efficient Tesla is now. They haven't always been, I don't think, but they are now. So, and a few interesting things I wanted to show you from this particular slide deck was that they're showing here how much capacity they have in California, which looks like it's at capacity. They're saying here that these factories are still ramping, can get to greater than these numbers, and then we've got these segments here: Cybertruck, Semi, which have started delivering to Pepsi recently, the Roadster, and then Robotaxi and others still to come. So even aside from energy, even aside from any of the AI stuff that Tesla's talked about, just on the car business alone, there's still a lot of room to grow. And one other interesting slide I wanted to show you here, we can have a look through some of the cool photos they've got. the General Assembly. They've got the Berlin factory there. The what is that? Model Y coming off one of the lines in Berlin, and this is the Giga Shanghai. And that's the casting, or the welding. So impressive from Tesla there. But there was an interesting slide. I think it's just after this where they were showing
how many countries are they doing their car manufacturing in? Is it just one particular country, or do they have sort of bits and pieces from all over the world?
At the moment, they've got California, Fremont. That's the original factory they had. They've also got Giga Texas, which is starting to ramp. They've got Berlin starting to ramp, and they've got Shanghai also continuing to ramp. So at the moment, they're in 3 countries, 4 factories with plans to build more around the world. And I haven't had a chance to listen to the call yet, but people have told me that was a topic of discussion as well. So when I do listen to it, I'll maybe provide some more updates. This is a slide I wanted to talk about. And I know, I suspect, obviously, because they've got it in the slide deck, that they will have some commentary on it. But this is showing at the end of each quarter how they've got a resulting number of vehicles in transit. And that's what occurred in this quarter. They had a number of vehicles in transit that they couldn't count as deliveries, hence the 42% delivery number as opposed to 50. But those deliveries will then fall into the next quarter. So they're trying to smooth out their deliveries and keep their costs down with the logistics of shipping them from country to country or selling them in country. And Tesla said before that there's no demand problem for them. They sell every car they make, and there's more to go. So, I think there's a bit of the drop, even after beating the earnings per share estimates. When they did their earnings, I think it's a bit of noise, a bit of fun, and you'll see the benefit or the upside of that in the next quarter's earnings. So I'll stop sharing, but if either of you boys want to jump in, I'll go to Joel first if you've got any thoughts on Tesla specifically, and then we can go to Brad.
I sort of had my question there, which you answered well, mate. And I guess the other little funny one I saw during the week online was Dave Portnoy, who's the founder of Barstool Sports. He complained via a tweet to Elon on Monday night. He was seeing too many bots on the platform. He said, hey, Elon Musk, can you fix these bots on this piece of SHIT platform you got tricked into buying? I'm getting botted. I'm getting botted to death. And then Musk actually responded to Portnoy's post by saying, I have a plan. So
I love that he said you got tricked into buying. And actually, I haven't listened to the call, but mates might have been pinging me and saying, Musk said he overpaid for Twitter on the Tesla call. So
well, it's did you overpay and because there's so many bots that you didn't know about, and that's probably a fairly valid point to say that you thought you were buying something that was that you lift off the sheet or the blanket covering, and it's like, actually, it's not what I thought I was buying. So
he overpaid because he bought it at the top, and then the market.
Well, that's part of it too, as well, for sure. And he's using the bots as a pretty good out. And I guess the other thing just note is the bots, for the listeners out there, their definition of those, if we haven't touched on before, are automated accounts that help drive traffic on Twitter. So they appear like real accounts controlled by a person. They retweet posts, like posts, and follow other accounts. Advertisers and marketing agencies and other companies are looking to reach real human accounts, not bots. So that's, for the listeners out there, why he doesn't like, or they don't want the bots, for one of the reasons anyway. There's many reasons.
Yeah. And Brad, do you have any thoughts on Tesla earnings? Or
I've got thoughts on 2 things. One, the bots, which is, I think, Arnie, you hit the nail on the head, which is all these talk about, he bought a company and, he thinks there might be
cut there, mate. I was just closing off a web. I just cut there. I was just closing off a web browser and it froze up. So go back 58 minutes when you started chatting, Brad, and just start again. Sorry, mate.
All right, once again, we're going to cut 58 minutes. Cool.
Yep. Yeah, I just closed off the browser and it started jolting. So yeah, 3, 2, 1.
Awesome. I've got 2 questions. One is around the bots. Not really question, statement, I guess, around the bots, which is, I think you hit the nail on the head, Arnie, which was Elon simply made a decision to buy at the top, and the market has cooled off since. And that is the real reason why he's paying too much. Yes, the bots are part thereof, but I'm sure he would have had an assessment of that going in, but maybe didn't realize the amount, the sheer scale of the bots. But there is definitely, the ex-security guy, up to 80% of Twitter accounts could be bots. So, I mean, it's going to be interesting once it actually does, if it all goes through, which looks like it's all going through, but who knows. On the other side, I'm sure he'll be very, very transparent around what Twitter is starting off from. I think it's going to be really, really interesting to see where it goes from there. But on the Tesla earnings, I think one thing I want to point out, which is that capital efficiency you talked about, which is increasing revenue with kind of near stable operating costs. And that kind of, for all those out there that are interested in startups or are a part of a startup and wonder why startups get massive valuations, it's precisely for kind of the stage that Tesla is at the moment, which is a business that is still growing really, really fast. Like if you're talking about a 55% growth in delivery of vehicles year over year, 55%. I mean, benchmark of good SaaS companies, for instance. I mean, I know Tesla's not a SaaS company, but it kind of falls into the technology market. Is about 40%. So production increases of 55% year on year is kind of insanity. But if we're talking about kind of increased revenues and product delivery of kind of anything over 40%, it's big. And during the infant years, the reason why startups get high valuations, even though they're losing money, is because they are growing, spending money to get to a position to where you are Tesla, where you are the leader in an industry. You've got market share in that industry, and then you're able to use that market share plus the growth in your business and technology to then become efficient and turn profit at that point in time. And there are businesses that obviously have built themselves like that, that are successful, like an Amazon. And there's a lot of businesses out there that haven't, like Airbnb, which went to the public market saying that in their IPO documentation that we may never turn a profit, or an Uber, etc. But the idea is that you are quick to market, you get market share, you use capital to keep your lead, and then when you have that lead and that market share, you eventually turn around and become, you use your scale to therefore keep operating costs kind of stable, but you keep your growth going, because there is a thesis that's been proven many times that once you have that kind of scale and market lead and the rest of it, that you're able to utilize those conditions to be a profit center. So Arnie, I can see that you want to jump in and say something, so I'll throw back, mate.
Yeah, thank you. I was just going to say one thing that's been brought to my attention, and still I don't need to delve into it further, but if you actually look at the accounts payable in Tesla's slide deck, that has increased significantly. And I know I'm not sharing screen anymore, but I'll quickly go down to it just so I can tell you all. I think it increased about $4.5 billion. So part of the reason why Tesla's accounts payable has increased so much is because they're currently ramping factories. So they're going to be suppliers they still need to pay. So when you take that part into account, maybe their results aren't as good. I mean, a balance sheet is a snapshot in time. So eventually they'll ramp, and those costs won't be there, and those accounts payable won't be there. But it's an interesting thing about how statements are presented, that they had such great numbers, but they actually have had a huge increase in money that will eventually flow out.
Yeah, but I guess the markets are things like OPEX versus CAPEX, so operating expenditure versus capital expenditure, right? And usually capital expenditure for large businesses like that, correct me if I'm wrong, that's more of your strategy, i.e. we are looking to spend this much over this period of time to enable us to do X, Y, Z. Now, in those years, as you start delivering that capital, the assets that come off that capital expenditure that are supposed to provide something to your business, that's what you're rated upon. So you sometimes have to go back 4 or 5 years when they started putting out plans around, okay, we're going to spend this much on CapEx for Shanghai and Berlin, for instance, and it's going to enable us to do X, Y, Z, to then jump forward 4 years and say, okay, are we actually hitting those numbers? Because there was a capital expenditure over the last 4 years to actually get to where we are. So, I mean, it's hard in one snapshot to ever do anything, right? But, I mean, I just want to touch on the point around where they're heading to at the moment, but also kind of like an Amazon, that's the reason why startups, you see them valued sometimes at $1 billion, and the next day they're bankrupt. The high valuations, people sometimes think they're crazy, but I'm just kind of explaining why, I guess, the thesis behind what is the point in a growth startup and what are they actually trying to accomplish. It's pretty much what Tesla is, becoming, which is market leader, way ahead of the pack, has got kind of logistics to kind of deliver worldwide. And then once we've got the scale, the lead in technology and the rest of it, they're able to then kind of pivot towards profitability and utilize their competitive advantage. But
yeah, I don't think it's a worry at all. I think it's natural and normal. And the fact that they're managing AP in such a way that it is growing is good for a business. You want to hold on to your money as long as possible before paying out to vendors because you get the net benefit of it. So
sometimes you got to go backwards to go forwards.
That's
it. Philosophy, MITT philosophy. I think we're over to. Are we doing any quick fires today, Arnie?
Oh yeah, I got a few quick fires, and I'll make it very quick because I know we've gone a while. But obviously, this is one of the. I think we'll suspend the $2 interruption here because if you want to jump in and say something, just do it. So the trust
suspension
government
of the $2. I'm instantly in there. See, couldn't help myself.
The trust government is on the brink as Tories agitate for her to go. They want a leadership change. So that's a quick one.
Have you seen the video?
No, I haven't. What video?
I got spammed the video this morning of, it's generally a circus in nature anyway, UK Parliament. But basically, I'll send it around to you guys on WhatsApp, but I might even put a small little clip in here. But it's basically Truss saying that she's a fighter or whatever, and you've literally got the entire UK Parliament almost like it's a UK soccer ground with like Manchester versus Arsenal, and they're all just like doing like a cheer, and they're just like it's pretty interesting to see that you can see that she's just completely lost everything across everywhere.
Okay, Jolie.
No, I saw some footage of another day in Parliament there. It's just an absolute circus. The parliamentarians have got no idea what they're doing when it comes to the economy. And they're just all about trying to win votes. And then look what happens in the last couple of weeks. What a shambles.
All right, back to this. The Fed in America, Bullard, says the Fed should not react to declines in the stock market. Public enemy number one. So, okay. The US 10-year Treasury yield rises to 4.2%, the highest since 2008. Putin has declared martial law in Ukraine's Donetsk, Luhansk, Kherson, and Zaporizhzhia regions. Sorry about pronunciation there. UK inflation rate rises to 10.1%. Estimated was 10%. The pound has dropped in relation to that CPI print. That's the highest inflation rate in 40 years in the UK. The dollar yen rises to 149.415, first time since August 1990.
Yeah, it's going to keep going.
Aussie dollar's about 63 cents.
62 today, 62.
Yeah.
And look, for the tankers, we've talked about it before, but as long as the US is raising interest rates ahead of generally where the rest of the markets are, I mean, the UK is way behind. Australia's starting to do smaller ones than the US. But their reserve currency, and basically, if they aren't raising interest rates, people are going to be buying interest-bearing kind of investment things like bonds and the rest of it in US dollars, which drives a demand for US dollars. And that's why you're seeing kind of the pound go down, the euro go down, the Australian dollar go down. And I mean, we've covered off Japan before. There's many reasons why their currency, but it's going to be interesting.
Yeah, spot on. Two more items, boys. Deutsche Bank headquarters raided by German prosecutors. So that'll be interesting to see what goes on.
Who knows?
Well,
mafia, money laundering, carbon credits.
Yes. And here's my final one. So Twitter locked employees' stock accounts in anticipation of closing deal with Elon Musk. So next week, I think you said the 26th of October, Brad, we'll find out what the outcome is of
that. Day after my birthday.
Hey, happy birthday for next week.
Thank you.
And that's it. That's rapid fire news, boys.
Thank you. Love it. So, Tankers, you've been waiting for it. The 50-50 for today. Had a quick chat with Brad before Arnie came on actually earlier just to discuss. And 50-50 this week, given it's the spring season in Melbourne, Melbourne-based podcast, this one. What would you prefer to do if you had tickets for? Would you prefer to go to a day at the races or an evening at the Cricket World Cup to pick a couple of teams? Australia versus England, that's a big one. But what would you prefer, Arnie? What would you prefer to do?
This is coming at me cold, and that's such a hard decision. I love a day at the races, but I would actually go with the cricket in this scenario because I feel like the races is like a really messy day, and I'll lose a lot of money. The cricket, I'll enjoy myself, not lose as much money. So I'll go with the cricket.
Unless you got the betting app going. Brad.
I'm actually doing both. Next weekend, I got 10 to 12 lads coming over from Singapore. And so heading off to the races and the cricket. But
that's not how it works, mate.
What am I thinking? Exactly. There you go, Arnie. Don't get interruption, but I guess we're still on interruption free. Damn it. Interrupt away, Arnie. I am going to go, and this is not a usual one for me. Oh, I'd usually pick racing, but I'm not that much of a cricket fan. But I think they're all Poms, and so I think the cricket with them, hopefully Australia and UK, and I think I'll pick cricket.
It'll be good fun. It'll be good fun. I'll be cricket. The
Oh.
World Cup. Oh, World Cup, pretty
Yeah.
exciting. I think Australia, England, that'll be a cool one. Races, I'm okay with going to the races, but they're here all the time. World Cup doesn't happen all the time, so I'm in for the World Cup.
That's three for three World Cuppers. I love it, boys.
Love it. Great stuff, guys.
Go Aussies.
And just before we sign off today, guys, where can they get us at for the tankers, Arnie?
At Money in the Tank, YouTube, Twitter, Facebook, Instagram, and keep it coming.
Love it, guys. Any questions? Yell out. See you next week for the 50th.
And hopefully today was a bit clearer.
Cheers,
all right, boys. See ya.
Bye.
Bye.